Another sideways and slow day for Tesla, ended up closing itself down 1%, but I'm still extremely bullish on this, and I think that we're going to see a push up to $200 by middle of June to end of June, and it is all going to rely on Elon's compensation package, which the shareholder vote is going to be on the 13th. Now, at this point, I am still holding my Tesla position long. I am currently switched my calls from June over to July. So I'm holding July 19th, $175 calls. And the reason that I switched them over is, like we said, we need some reason to break out of this consolidation range. When we usually see price like this sit where it's, not coming in and making lower lows, but it is making lower highs found by higher lows. And so what happens is we'll usually squeeze within this range until we have a fundamental reason to either break out or break down. And the only fundamental thing that I see coming out, unless it's going to be maybe some news or random numbers that come out, but for the only thing that I can think of right now is that compensation package for Elon, which is going to be on the 13th. So from my understanding, Elon wants 20% ownership of Tesla. I believe he had more than 20% ownership of Tesla, but did sell a good amount of shares so that he could acquire X, well, I should say Twitter, which is now X. So on the 13th, shareholders, I believe, are voting to see if we should give Elon 20%, or at least shares back to where he's at 20%, so that he can have some more control of the company. And I guess, obviously he wants more money too. Now, in my opinion, this is extremely important, because if they deny it and if Elon walks away, he is going to take the AI division with him entirely. And now I will say that I love this company and I believe in this company for the long term, but my main reason, basically my entire bullish thesis on this company, is robo-taxis over the next 10 years, is going to be FSD over the next 10 years, and more importantly, is going to be based around all of the data that is being fed to basically Tesla's brain. And so that is my long-term play here. And if Elon decides that he's going to leave, he will take the most important parts of this company with him. And that will mean that Tesla will go back to being a car company and not a robotics company or an AI company or a data company. They'd still be a data company, but that's what we have to look for. And so this is going to be, in my opinion, the catalyst to either crater Tesla back down into this $144 level, or it's going to be the catalyst to move us back up to 208, 212, and maybe even $216. Now, at this point, 80% of the time, we will usually break out when we have this type of setup. But we know for sure that the only thing that is guaranteed is nothing, right? We could wake up tomorrow, this could gap down, we could be down massively. And so that's why when we're trading or when we're investing, we're only investing with what we are willing to lose. And so even if Tesla pulls back, even if I lose money on this position, it's not a big deal, right? In the short term, it will hurt. But the reason that 95% of investors and traders fail or can't beat the market is that it's so unnatural to take a loss. It is so unnatural, more importantly, to take multiple losses and to continue to move forward with that. And that's what I really try to push here on my channel. The fact that you're not always going to make money each and every single month. Like, let's go back to January and look at my P&L. So my realized P&L for January was a loss of $34,521. And I only had a win rate of 56%. So if you followed me in January, you probably thought that I was a scammer, loser, or just an absolute idiot. Fast forward to the month of February, we end up having a 73% win rate with a $138,000 profit. So not only do we make up for the month of January, but we basically paid for that almost 5 times over. Move into March, 67% win rate with $120,000 in profit. Move into April, very consistent, 65% win rate, $111,000 in profit. And then moving into May, which was significantly more rocky. You can see at one point we were actually up 120 grand. Instead, we pulled all the way back to only being up 19,000, which is still very good. And then pushed back up to end the month up $75,961. But my point is that when you're living day to day, you're looking at this P&L and you're like, oh my God, this is so much. But time, just like everything, stretches it out to where you don't even notice these pullbacks. Look at this this is December when we were up $221,000, pulled all the way back to only being up 171. So that was the month of January. And that's when we could have looked at this and said, dude, are we sure that this is what we're going to do? Are we sure that this is going to work? But because we stuck to it, you can see that every one of these pullbacks probably hurt short term. It doesn't matter over time. So I expect price action on Tesla for the next couple of weeks, at least until the compensation package vote happens, to be very, very slow and very, very boring. And we have to just see what happens from this point. Like I said, I rolled over all my positions to July, and if I have to roll them over again to August, then I'll do it. My stop loss on this position, though, will be $168. If $168 is broken and held below, there's no way that we do not move down and gap to $144 and end up filling that gap like we said from before. So I hope this video helps, guys. Thanks for all the support. Make sure to check out all of our free courses. The link will be in the description. And as always, guys, thank you. Peace.